Hi, Warriors. The new chapter is about to be written in the financial markets history starting today. Okay, AJ,
Wait, what's happening today?
it's the end of the tightening regime and the beginning of an easing regime by Mr. Jerome Powell. Okay,
It's going to
so
be a big day, Dale. It's going to be a big day.
yeah, you know what, Blake? I think it's going to be like we say every day. Today will be very critical. Okay, like more than usual. But we'll see what happens. Just want to say hello to AJ and James. So everyone prepare themselves. You know what doesn't change? Price action. So it doesn't matter what the Fed's doing if you know how to read price action. Doesn't matter what you trade, you could cover up the title of the chart and still be able to trade it. Okay, so when you learn technical analysis, you have a skill to trade every environment because it'll be reflected in the candles that you're looking at. So take comfort in that. Patrick, how are you? You take some comfort in that. Brand, you feel more comfortable as we forage into massive volatility. You have very high expectations of me. Anyway, Ryan, I know he's ready. This guy has seen everything. All right.
Sip my
Blake's
hat.
Blake, he's seen everything. He's ready. Richard, good morning. Hugo, Glenn. Patrick says he's ready. Okay. We want to see your P&L at the end of every month. Okay. It will improve if you were inside the community and take advantage of our offer here. As good as you are, you'll be better. We can always be better. All right. We can always fine tune what we've been doing for years. And you know what? Trading's like football and other sports. It's a game of inches. You get in a day early, you get out a day early. Sometimes it's an hour. So it's a game of inches. So refine your skill. Okay. And you know how you do that? Iron sharpens iron. So get into the Iron Man's chat room. So I'm thinking about this melt up, and I started looking at Bitcoin here. I think this is going to be part of the participation. I don't see anything bearish in this. Okay, especially if we're going to hold 55, that would eliminate a pullback to 40. But we start breaking out. This to me looks like a flag, right? So if it is a flag, it breaks out, say 69, and the flagpole, although begins out to be curved, you're talking about a $50,000 move, right? 50 to 60, excuse me, 75. So a breakout is going to give you well over 100,000 Bitcoin. And I think if it's going to happen, and it kind of woke up yesterday, all we've been doing is consolidating. I don't think that's a top. And I think this is going to be part of the melt up scenario that lasts really not that long. I'm thinking into, after the election. That's not that far away, guys. It's 6 weeks. So the other market that should outperform, and it did yesterday, is IWM. Okay, so IWM should outperform in this stage, things like the Dow, and yesterday it was up 0.83 when you actually had S&P's fade and only close a little better, and NASDAQ fade. So the Russell should beat the leadership in this phase of the rally. So why don't we get back to the crew? So we
Yeah,
had that.
Dale,
What?
since we got
Yeah,
such a big day today, what
yeah,
what I thought we'd do is let's go around talk
The
with
horn.
Ryan and K-Man and talk about like all the different scenarios that can happen with the FOMC today, because it's not just, it's multifaceted. It is not going to be we're getting either 25 basis points or we're getting 50, and that's the fact. And it's and we're going to have to talk through it all, because the dollar index is literally at range lows. You've got gold at breakout and all-time high territory. And we've been sitting here in the ForexAnalytix chat room literally for the last hour and a half talking about all these different scenarios that could unfold. And fact of the matter is, if you're not there chatting with other people about this exact thing that's happening right now, you're in the wrong place, and you should be where we're at. Because for example, Benedict just showed, which is a very, very interesting chart, because on the week ahead video, I talked about gold, being a breakout territory, doing a range extension that comes in at 25.95. We got to 25.90. And it may be done. And then he just posted a cup and handle pattern that just completed long term, like on a monthly basis. And so there's a lot of things that are happening on gold. And yeah, if you're not looking at that chart, what he just posted, you're in the wrong spot right now. And
yeah, because there are warning signs, and you know what? You brought it up, so I'll show it. This is a best of breed gold stock, Newmont. I just want to show you guys this, so it doesn't guarantee a move lower, but when you look at Newmont, you have it in this wedge. You have a couple of drives. It's diverging. You know what? Gold is diverging on the daily, even after all of this. Look at that. So we haven't confirmed since April. But Newmont is interesting because it left a gap up. I think this was Friday, right? And then since then, we filled this gap, which could end up being an exhaustion gap. So there are warning signs. It's not saying it's a short, but it's saying, you know what, take something off the table. And with that being said, I'm in the quarter camp, Blake, and then it'll come out. I've been saying that. And then the key will be the presser that he starts talking about continued cuts and maybe larger cuts. But I'm going with a quarter.
I'm in that. I think that's what they're going to do. I'm just hoping they give us 50 basis points. I think they have the the justification, I think, at this point to be able to do it. And then they've got the market behind it, pricing it, so they can deliver 50. And I don't think they should either. I think they should only do a quarter. But the fact of the matter is they one of those two, either reaction right there is going to elicit a pretty big response right out the gate. But we're not just getting a Fed, or we're not just getting a rate cut. Holy cow. We're not just getting a rate cut. We're going to have other data coming out right at the same time. Isn't that correct, Ryan?
Same time as what?
As the cut. So we're going to get economic data from the statement.
Oh, you mean the forecast? Yeah, we're getting the forecast.
Yes. So we're going to get the summary of economic projections too at that time.
Yeah, and the dots, the all important dots.
Yeah, are the dots important? So we were just sitting again. I'm gonna reiterate, guys, just real fast. All right, this is the ForexAnalytix chat room. This is what we're having discussions about. And if you're not in the chat room having these types of discussions, getting prepared for your day, you're in the wrong spot. And if you go to ForexAnalytix, we have our 8-year anniversary sale. Take advantage of it. You can even buy 1 month, get 1 month free this month. But the annual and semi-annual subscriptions are the prices that people wait for all year long. So make sure you take advantage of it. The prices are good until the end of September. Okay, I'm done with that now. I just needed to mention it because that's where we've been just chatting about everything that's going on. Plus, you get this amazing tool here. K-Man, you said something really interesting today. Not real interesting, but interesting because it's worth definitely digging into today about
John Wayne.
Not John Wayne.
Good morning.
But that's true too. But more importantly, the different scenarios that can transpire today, you know, like for me, and this is where Ryan and I we were just discussing, we're on opposite sides. I'm like, man, I hope they give us a 50 basis point cut initially, because I think what's going to happen is you're going to see the dollar knee-jerk reaction lower, and it's going to pop all the stops below the dollar index lows. This range that we're in, I think these stops are very, very doable. And I think what happens is you get a more hawkish presser. So you go boop, boop, like that. Now Ryan's like, no, I'm thinking the other way, and I'll let Ryan do the speaking here, and then we'll go to K-Man, and then, you know, we could talk. Dale, I'm sure you're like, well, we're going to get 25. That is part of it, but there's more to it. So let's discuss all of this. And let's start off with Ryan, because you and K-Man were on the Flow Show earlier. What are your thoughts going into the Fed today? What is the Fed going to give us based on your views?
Well, my view is that they go 25 and they set up a series of 25s, and they keep 50 on the table for that optionality. You know, if they say they're going to cut 25, maybe hint at each meeting into the new year, then that is the middle ground for the arch doves who want a 50 and the 25ers who want a slow, steady pace. So I think that's the sort of middle ground I think they might take. Irrespective of that, you've got to look at the wider picture, and this goes to our conversation we had in the chat room. If they go 25, okay, we're going to see, obviously, the dollar rally. We're going to see yield rally. That's not going to matter, okay? The Fed are cutting. They're going to start a cut cycle. They are going to take rates, all being well, down to 2.5%, 3%, whatever it may be. Okay, so any rally in yields, and you're probably better looking at the 2-year for this one, Blake. Any rally in yields is likely to be hit again, because we've been coming down in yields all year. Okay, that's a move that's not trading on a 25 or 50. That's a move that's trading a cut cycle. So any rally in the dollar, any rally in yields is going to be faded, I think, because the proper fair value for 2 years is probably down around 3.2, 3.3%. That's close to Fed target. So you've got the short-term picture, which you want to trade, which is a 50 by the dip. And there's the longer-term picture. I can sit back, watch a rally, and then look to maybe sell it.
Okay, so and I'm glad you brought all that up, and let's talk really quick through this scenario, because you're like, okay, they're gonna, if they give us now, the Fed is, or the market is pricing in a full 100 basis points of cuts this year. If they only deliver us 25, and they say the door's still open to do a 50. But, you know, we're on pace for November, December to deliver another 25 at least. Wouldn't the market be disappointed, and wouldn't you see yields rally and continue to rally throughout the course of the day, and the dollar, you know, continue to squeeze?
Yep. And longer than a day, probably get a few sessions, maybe even a couple of weeks until the next bad data point, and then we go and play the game all over again.
Right. So you would see the 2-year probably.
That's why you've got to look at the dots, because if they go 25 but still indicate 100 basis points of cuts, then that's not such a undovish 25 cut, because they're saying, okay, we've cut 25, but now we're still expected to do another 75 by the end of the year. Okay, and you know, that still keeps a 50 on the table. It still keeps a large one on the, you know, in the cauldron.
All right. All right. Hold on to your thought. Let's go to K-Man really quick. K-Man, because I know you've been up talking about different scenarios too. Do you agree with Ryan, what Ryan's scenario is, or do you think there might be something a little bit different today?
Yeah, well, that's what we've been talking about for so long. There are at least 3 or 4 plausible scenarios I can see, even in between statement and press conference, having a bit of a different approach. I am still. But like, it's nearly 50-50 for me. I still think that it's possible they only do 25 and disappoint markets. But They will for sure leave the door open to higher cuts if that is the case. But already doing a 25 should see a bit of a knee-jerk reaction on the dollar, and then we will see what happens. Just the bond market and will be our guide on whatever happens today. But Powell himself told us that they won't tolerate or they won't let go unemployment. So let's see what they do on the unemployment rate, what they come up with, if they prop up the expected band of unemployment rate. That may be as important, because that would actually weigh a bit on the dollar, I guess.
And can I just stop you really quick and say, this is something that if you didn't listen to K-Man's interview, I interviewed him one-on-one for about a half an hour on the Trader Summit just earlier this week, on Monday. He went through the data. So if you guys, I'm going to pull up that interview, because you break down the actual unemployment rate numbers. I want to make sure everybody here is looking at that. I'll post the link in the chat room. So, or in the box. Go ahead though.
Yeah. Okay. So there are a lot of different permutations. I think, well, for me at least, what I'm first going to look at is obviously what they come up with on the dots and the unemployment rate, and then listen to what Powell says, because if Powell really comes over as saying like, now I told you that we won't tolerate the unemployment rate to get worse, or unemployment in general to get worse, it could be that he leaves the door open to several 50 bps cuts, in which case that is potentially, some people say, and I thought it at first as well, that it may be counterproductive. But if he brings this over as saying like, we want to do everything to support this market, it could be an absolute Goldilocks scenario for risk later today as well. And that's why I'm saying we really need to listen carefully and look carefully at what will be produced and done today, because I can see at least 3 or 4 different scenarios here, and how the dollar will react and the length of the reaction will depend on what the kind of different scenarios will be. If they go, everything is still okay, the unemployment rate is not racing away, still within our expected range, then there will be a lot of disappointed people, and then you are going to see several sessions probably of equity markets perhaps giving back a bit, yields starting to rise, because we can look at those yields in different ways. Yes, they will be on the path of lowering yields, but it's going to take months, right? Potentially a year and a half or so before they, or even 2 years before they get to get to neutral.
To where the market is.
Sorry?
To where the market is already.
Yeah, to where the market is, Dale, but the market is not going to stay here if they only go in small incremental moves. You cannot price the 2-year at 3.30% today if you expect in 1.5 years the Fed to be at 3.3%. Try to for the people who are is maybe too technical, but try to make a bond book and based on 3.30 in the 2 years now, with what you expect to be in the 2 years in 2 years time. So compare that to 365 and 3.30. You will lose a lot of money on funding and hedging. A lot.
Shit, I have a hard time figuring out what's going to happen 15 minutes from now, let alone
I mean,
a year from now.
That's why I'm saying we can't simply say they are on a cutting path and this is where they should end up, because in between you can still go back to 4.25% if the NFPs don't show worse. So now I just want to make a point saying that it's going to be very hard unless they come out with the scenario just incremental cuts. We are not going to give you any 50s. This is one side of the spectrum. Or we do 50 and we are ready, like Draghi was saying, whatever it takes. Then you're going to see that's the other side of the spectrum. But you've got like at least 2 or 3 possibilities in between. That's going to be the problem today. That's why I'm thinking we may be in a John Wayne scenario, slamming a few saloon doors.
Yeah, no, some really great overview there, K-Man. Really appreciate it. Let's talk a little bit about, just times. We have first of all, we have the Fed, the announcement itself, the actual statement itself. Now that statement happens at 2 o'clock. And then after that, we have the press conference 30 minutes later. So whatever you do, whatever your reaction is, the initial, because a lot of people just follow price, as Dale, you were talking about a little bit earlier, learning how to read a chart and understanding how to navigate around price action. I was actually just talking to a friend of mine last night about, I'm like, I can teach anybody, a monkey, to read a chart, and he's like, you call me a monkey? I'm like, yeah, I am. Anybody can learn how to read a chart, but it's actually navigating through sentiment, the ideas, the themes, and understanding why something is moving, and then when to leverage up in a position, and why you're doing that, versus just looking at a chart and trying to make a decision from blindly. It's like trying to drive with one eye closed. So when you have that initial reaction, you have to be really careful about what you want to do or what's going to happen the next 30 minutes after the press conference starts. So how do you think, and I want to ask Ryan, this is a tricky one for the Fed chair, and this is all going to be about framing what's going to happen over the course of the next few months, especially in an election cycle. So what are you expecting to hear from the Fed chair, after he makes his decision? How do you think this press conference is going to go down in your view?
Again, it really depends on how he wants to be. If you take all his prior press conferences at their word, okay, they're worried about a softening in the jobs market. Okay, inflation's already on track, so the conditions for cutting are there. He's hinted they're going to cut. He hasn't ruled out a 50, so that's what he's got to navigate. He probably knows, sitting wherever he's sitting now, looking at his screens, he probably knows whatever he says is there's going to be a volatile reaction. So to one aspect, he's probably going to go, well, it's going to be what it's going to be. He has to just steer the economy in the way they want to steer it. And so the press conference is probably going to be, I would say, probably a lot like what we've heard already. Okay, here we are, we've cut. The risks are still there. We're still watching the jobs market. We're ready to do more. We're ready to go bigger. So I think it's probably not going to be any different really to how these other press conferences have been, because nothing has really changed. The unemployment went down. Jobs are still not falling off a cliff. There's still jobs growth. We're not seeing anything in jobless claims. The data points, you see one down one, you see an up one, you see a down one, you see an up one.
They're not horrible, right? It's not
exactly.
It's not
so if you look at the fundamentals, we are no different now, give or take, to where we were at the last FOMC. So is that any reason to suddenly pull a 50 out the bag? But then on the other side, do they want to get in front of it? Do they want to not chase weakening economy? Look at the BOC. They've done 3 on the trot, and inflation's still falling. So maybe do they have one eye on that and think, well, they've done 325s and it hasn't done them any harm. Maybe we need to do a bit of catch up and do a 50. So it's, as Kay said, it really is up in the air, and it's going to be dangerous for traders today. So if you're inexperienced, the best advice I could give is sit back, look at your levels, plan your levels, trade the aftermath, rather than try and get messed around in the middle.
All right, wait. You said if you're inexperienced, screw that. If you're experienced,
well, if you're experienced, yeah, I mean,
you should be stepping back,
exactly,
bringing down your position size, look at your levels, and trade around those levels.
The big problem we've got, and as Kay said, and we've said, if we're going to get some game changing news, you're going to see the market moving for an extended period. This isn't an NFP. You get a move for half hour, then we're all done.
Right.
So if you see a rally in the dollar and think, yeah, I'm going to hit a rally in the dollar, you can't really look to do it 10 minutes after the FOMC is finished, because it may go on for several days. So you need to just have a bit of patience. Don't jump the gun. Don't get that FOMO. Sit back and see what the price wants to do, and then make your decision.
Right. Okay, so we got it just a few minutes before we have some economic data that's coming out. So we haven't, Dale, I want to ask you, how are you looking to trade today? What are you looking to take advantage of? I'm going to tell you guys at the very end here before the data comes out the way I'm looking to play dollar strength or dollar weakness, but let's start with you, Dale. What are you thinking?
Okay, well, I'm gonna take Ryan's advice. But over the next couple of days, if the market is disappointed, and when I say market, I mean everything, because it's all one market, I'm buying weakness over the next few days and then selling dollar strength if it tries to make a move towards 102.5 in the
So you
next several
don't think
days.
this you don't think this double top in the S&P is going to hold? You think that we're going to bust through that and trade up towards
Yeah,
new
I
highs?
think we're going to 6,100, and then we could have stops under this triple top. That's yeah, there you go, up around your return line. So yeah, I'm saying the everything bubble continues for another 6 weeks until after the election.
All right. Well,
And
the everything bubble could take us, based on my chart, 6,100 is what Dale was looking at. Channel top would be 60, about 62, 6,300, depending on how long it took us to get there. So I see what you're
by
looking
the
at, Dale.
election,
By the election, by
don't buy
I'm
it,
not.
but BY by the
Oh, it's not goodbye wife, goodbye
yeah.
car. Okay, all right.
Anyway, that's
Ryan,
it.
how are you looking to trade the FOMC today? How are you going to play it?
Well, the only real trade I'll have on is my long euro dollar, so I'll be keeping an eye on that. Long from 110, so I'm probably going to tighten my stops up a bit because I've got a bit of margin in that to play with. For euro dollar itself, for me, it's 112, 112.75 on the upside, and it's 110, 109.40 on the downside. Everyone else can play around in the middle. I'll just look to see if those sides hold or break, and whether those breaks are sustained. Dollar CAD's a good one to watch because the levels, we're bang in the middle of the range. I've got a range 132, 139. So give or take, we're pretty much in the middle. So, 400 pips one way, 500 pips the other way is a good stretch point to see a decent move, but keep us in the range perhaps.
All right. All right. Very good.
The
K-Man, how are you
Aussie could
looking?
put in a major breakout out of an ascending triangle. Anyway, I can't show it, but all of a sudden Aussie looks a little better even than Euro in the last couple of days. So, but they all look good still.
K-Man, how are you looking to play? How you looking to play the FOMC here?
How many IDs do you want?
Just a couple, because I got to give a couple too.
Okay. Aussie 68 figure a quarter. Gold on gold 25 90.95 and 25.30 on the other side. And I'll leave it there then until tomorrow's Bank of England, because I've got a pretty decent ID on sterling as well.
The long-term trend line in the Aussie dollar comes in at 68 and change, 68.30 or so, 68.50. We were just talking about that in the ForexAnalytix chat room, just in case you get an upside break in the Aussie with that bull flag pattern that, this is what K-Man was just referencing, but just watch that very long-term trend line. Look, guys, if we get dollar strength, I am going to play dollar Canadian back to the upside. I know it's got a bear flag pattern, but I think all this spec shorts that were built up over the last several months, they got flushed out below 136. I think they're all now that they all got totally screwed. I'm going to play it back to the upside. I still think the dollar CAD's going a lot higher. That's on dollar strength. If we have dollar weakness, though, I'm with these guys here as far as the euro goes, especially Ryan. I think the euro is going to do the unthinkable, and we're going to be, completing this bull flag pattern up towards 114, which would take us to a long-term ascending or descending trend line, right around here. So I have contingencies to play either direction, and I'm not married to either, because I'm going to come into this. I'm going to come into today as a reaction, not not trying to get ahead of anything. So real quick, we got some economic data coming out. We have building claims. Let's grab the calendar here. Here's the data flash. It's off of ForexAnalytix, so you guys can see the data. As soon as it comes out, I'm going to push that over really fast.
Good numbers. Good numbers.
All right. And okay, very good. Good numbers. So I'm going to close out my euro short right now because I was short a little bit and just close that out. And the data did come out, and yeah, it is decent housing data. Building permits is good. Housing starts is good. So yields continue to push a little higher. One of the things, and we were just talking about this, and K-Man, maybe you can throw some flavor in here real quick before Rohit comes in. The dollar yen. If you guys listen to like macro podcasts and or watch some YouTube videos on all these macro people that never look at currencies, they're all very bullish the yen. Very, very bullish the yen. Hedge funds have gone flip net bullish the yen. Bloomberg's had a couple articles on them over the last couple of days. They've gone from very net short, from being carry trades to now they're net long, expecting the dollar yen maybe to go to 140. If yields do rally, you could see a real squeeze higher in the dollar yen. I think it's, and there's a huge amount of options expiring. As Ryan pointed out, and here, I'll give you guys a quick glimpse. It's because it's in Forex If you don't know where to find them, you go over to orders and options. There's a huge, almost 5.6 billion worth of options expiring in the dollar yen today at much higher levels than where we're currently at, which could act as a magnet. There's all that's playing in, but dollar yen. What do you think about that one, K-Man, really quick before we flip it over to Rohit?
I mean, it's going to be binary, yeah. Well, binary and everything in between, perhaps. No, I mean, if Powell and friends go incremental, small cuts, we are ready to wait. I think dollar yen trades back up to, I don't know, 145, 6, 7. Could go there. If and the other side of the spectrum, obviously, that the market will take to heart is that if they go all protective and larger cuts and stuff, that obviously will weigh on the dollar yen.
And one of our listeners pinged me yesterday and on Twitter and thought that the BOJ was going to act this week, but they shouldn't act this week, correct?
I think that even politically they won't act. Even if they would want to raise rates, I don't think they will do it before the LDP elections next week. So I don't think we have to expect anything from the Bank of Japan, but they will keep the relatively hawkish rhetoric in place. But you don't buy or sell yen on somebody telling you something and not acting. So I think most of the economists expect them not even to move anymore to this year, but I think that the chances are pretty big if the Fed doesn't go all like gangbusters, cutting like whatever BPs. But I think there is a real risk for next month, though.
All right. Well, thank you very much, K-Man. And remember, if you guys want all this knowledge and more and be able to be in touch with us all day long, I mean, I'm in the chat room maybe 15 hours a day. Plus, you get this great application. Take advantage of the 8-year sale price in ForexAnalytix. Again, it's not there all year long, and it disappears. And once it's gone, it's gone. So get involved in our community. Probably one of the most active communities you can find out there. Take advantage of it. Dale, I'm going to pass you over to Rohit. He's one of my more favorite technicians that you interview here, and I've brought him on the Trader Summit. So make sure you guys stick around for Rohit. He's got some really great looks. Dale, thank you. Good luck today. Ryan, K-Man, thank you guys. Really appreciate all of you.
Cheers, guys, and be safe, everyone. Trade safe.
Yeah. Marcus will be here after the Fed. Make sure your equity is, and someone that's going to guide us into the future. Rohit, can you please accept being promoted to a panelist, please?
Yeah, it's something that they have to actually click the accept button. So hopefully he does that. And Dale, I want to say good luck today, buddy. It's going to be a gnarly one. And let's remember, guys, take down your position size. This is not a day to be a hero. And as K-Man's been pointing out, there could be the saloon doors. That means, you know, you swing from one end to the other and you're like, oh my God, you know, that you can get whipsawed and, you know, and really need a neck brace. So just keep your position sizing in check, keep your risk in check, and be careful out there. These are the days that could break your trading career if you're not careful.
Yeah, it's a one mistake business if you let it. So anyway, we have someone to guide us into this fall quarter that we're about to head into. And Rohit, it's always great to welcome you back to F.A.C.E. Thanks for coming here today. What are
Great
you
pleasure
seeing, buddy?
to be on an interesting day, week, month. What should I say? Season.
Yeah, yeah, that's right. Season. We're headed to, I think, 3 days away from the beginning of fall. We had a lunar eclipse last night, so I have to go out and harvest my wheat and corn in another month and fill up my silo so that when we have a famine, I could help everyone out. That's my plan. What do you think? Anyway, I mean, even the grains are popping. So if you want to share your screen, Rohit, I'm
Yeah.
looking forward to seeing your technical work. I always enjoy it, always learn something from you.
Yeah, I really wanted to start, since you said season, I want to start with some seasonality charts. One on India, and then I'll just look at what is happening in the US. In India, we usually have the worst seasonal months here are February, and followed by that is September. So we are in the weakest part of the year. Markets have been pretty much flat this month. We haven't seen much gains compared to the last 2 months. But we haven't had a correction yet, though I think there are a lot of divergences, a lot of positioning data, all of which is pointing to a potential decline. So we're really waiting for that to confirm. Maybe it only happens after this event, because sometimes events like the FOMC meeting can end up being buy an expectation and sell on news. And in the near term, at least, that is what I'm trying to look for. And one of the reasons is, like I said, seasonality. So I'm just going to quickly show you what has been happening typically with the US elections, which you sometimes call as the presidential cycle, is essentially late September to till the point where you have the election results. The last 3 times that I've plotted here, the markets have been down. And then once the election results are out, they've actually gone up. So this is 2012 when that happened. Repeat here, 2016, Donald Trump. Repeat here, 2020, Joe Biden. And this is where we are. We are bumping up to the top end of this range. But I'm thinking that if the same seasonality is going to play, then what we should be looking for first is a dip into the election results into late October, and only pick up and head higher after the results are out into probably January. So something like this is what I'm trying to think about. I'm wondering whether it gets worse or not in terms of the downside. That there are enough other reasons to believe that, but I've discussed a lot of reasons last time why that should not be the case. But it might end up being that the market does pay attention to some of the things that have just happened. For example, the yield curve inversion, the inversion rather, the steepening that has started to show up. And so that is one thing, if the market does pay attention to. I spent a lot of time thinking, and I discussed this last time, that in an inflationary environment, possibly that doesn't lead to a recession. But the fact being that on the last 4 occasions, as I'm showing here, there was some level of market reaction. The smallest one was 1990, where the market only fell 20% and then it went back up. But it did happen. At least there was some setback due to the steepening. The other 3 occasions, we have seen a serious correction or a recession into 2020 as well. And then we're having this right now, right? We've just crossed the line. We've crossed the 0 line. And so that raises the question, are we set up for some kind of market reaction? And this also ends up happening at the same time when the 2-year yield falls, right? It's linked to the 10-year, 2-year story. But if I take a slightly longer term chart, the 2-year yield ends up reversing to the downside around these crises. So will we get a crisis here? And we even have an ending like pattern on the 2-year yield this time. So the warnings are also there. And the the reasoning why it should, at least if it just ends up being a routine correction, it can still continue and not be a recession because of the inflationary environment. That also I think is at the back of my mind. But near term, at least for the next couple of weeks till the election time, I think there's a good case for a dip, especially again if I look at, say, weekly momentum here. I'm looking at our own momentum indicator. We have a negative divergence on price. So I usually look for these cycles to complete, which means if you get this kind of a dip, the RMI comes back to 0, and then we start a new cycle. So I would not expect a new cycle till that is complete. So this is sort of my.
Can I get a question in?
Surely.
So you're looking for this dip, Rohit, but
yeah,
we haven't made new highs in the S&Ps, and a lot of people have this wave, not pulling back, but continuation move to complete 5.
Yeah.
That's also an option, isn't it?
Yes, that is also, you're right. That's also an option. I have tried to consider it in the possibility when I'm actually looking at the S&P chart here. So I have tried to think that, whether 4 and 5 happen, but what I've seen is that if that is happening, especially at a larger degree, which means that if I'm trying to complete 5 waves up from March 2023 or from January of 2023, then usually that would involve a new cycle. So which is why I was expecting that the sell-off happens before we do the 5th wave, if there is one, rather than it happening right away.
Okay, because that would be kind of a blow-off melt-up scenario.
Yeah.
Which bulls have been talking about that we really haven't had yet. We've been range-bound here for a while without making new highs in the S&Ps. In fact, this is the 3rd attempt.
Yeah.
Right?
Yes.
Or at least yeah.
But it's become also it's become such a most anticipated event that many of the underlying factors, like the dollar index, for example, is already fallen. I'm marking it as 5 waves here. So on the weekly chart, if it does complete 5 somewhere here or in the next few days, what you get first is a rebound before the dollar falls again. So this is where, so the risk is essentially here that you get some bump up in the dollar because we've already discounted a large part of the fall. The same thing we can see even in the 10-year, for example. The 10-year yield also has been falling consistently for quite a while, and could be due for some kind of a bump up before it goes lower. So that's why I thought that this possibly become a discounted event, looking at the way bond yields and the dollar have fallen. The only odd thing here has been commodity prices, which have actually not gone up while yields are falling. They're just waiting for the decision itself.
You're talking about gold and silver?
I'm talking about copper, oil.
Okay. Yeah. Industrials.
Gold has, of course, done better, much better than the rest. Gold, in fact, looks more like this, like it has actually gone up in 5 waves. So if you actually look at the gold chart, we're sort of getting into the 5th wave, maybe an ending diagonal. So it may also complete something out here. And then we could be set up for at least a near-term pullback. This large part, I mean, I'm just talking about this 5 wave getting a pullback, and then continuing in the longer-term upward trend.
Boy, that'd be a nice buying opportunity. Okay, and that happens with the market because it's all one market still, isn't it, Rohit? I mean, for the most part, it's like a balloon. When the dollar's weak, everything expands. When the dollar's strong, everything contracts. Just different degrees of magnitude.
Yes, that's
right? Okay.
The dollar has become the central liquidity factor for everything.
Well, it hasn't become. It's it is, right?
It
has been for a long time.
Long enough time, yeah.
Yeah. All right. So the key is going to be the dollar. Whether we put in 5 here at 150, or if we go to 97 first, 97.5, which is the next target for me, that would most likely support the melt up in the stock market, right?
Yes. So I'm thinking, I mean, like in the big picture, what I've drawn here is we did an A wave, a B wave, we are in C. I think the C subdivides into 1 of C, 2 of C, and 3 of C. and the next
I
leg of
see.
gains start happening
Yeah.
in 3 of C. So 3 of C is where I think the major melt up, which should also happen along with the commodity cycle, because if you look at the Bloomberg Commodity Index, that's also sort of getting to the bottom end of its range, almost a 66 or 61% retracement here. So I'm marking this as a second wave. And if you take a retracement, sort of just not reach 61 yet, but the trend line of the last two lows has been touched. So either it's done here, and we should be due to start the third wave sometime soon. And that therefore the third wave of the dollar, the next bull run for commodities is what I'm really looking for in the big picture.
Have you looked at agricultural? Like the grains have been under pressure since the invasion. They peaked in,
So I do like sugar, for example, and coffee. Those are two.
Coffee was smoking yesterday, right?
Yeah.
Okay, you like sugar and coffee.
Yes. So
Cream.
sugar, like for example,
you need any cream in your coffee? All right. All right. So yeah, sugar had a nice pullback.
Yeah, it's had a nice pullback. I'm saying it's a second wave, which means this is a large wave 1 and 2.
Nice.
And we should be starting. We've broken out of this wedge, so I think we've already started a third wave. And that should be good for sugar and for sugar stocks. In India, we're a major producer of sugar. So sugar companies actually end up doing pretty well when the sugar cycle starts.
Okay. Sugar, coffee, so the softs. Okay. And anything else?
We could have a case.
You're showing wheat. Wheat looks pretty good to me. Wheat, the beans too, and corn looks pretty good too, like we're getting a bottom.
We got a double bottom in wheat, yes.
Yeah.
Right there.
Divergences. So this could really, so what's ironic, I want your impression of this, is that Powell is claiming victory over inflation right at the onset of a new bull
of the next
wave.
cycle.
Right at the beginning of a new bull wave in commodities.
Yes. But the good news would be that it actually would show up in inflation data, probably with a lag. So for example, I mean, wheat is not going to go back to 1300 like tomorrow. It will take like 2-3 years to happen. So by the time we start worrying about the next inflation cycle, we probably have a 1-2 year period where we can still say that inflation is still low. And that's where the boom bust is, right? We can enjoy that phase till inflation comes right back. So it's definitely coming back, but I hope it's 2 years later.
Well, what if we're entering a deflationary cycle right now until the Fed opens their bazookas later?
So the only chart which is showing some sense of that possibility, I think, is oil, which is knocking on this support, and everybody's asking me, can't you see this head and shoulders pattern?
Well, yeah, what's that measure? 0? Oh, okay.
Not 0, but definitely $30.
Okay, yeah.
But we are still at that support, and so if I just think about it, I mean, we are of course doing charts, but logically, you wouldn't want to shut down the fracking industry, which wants $60 oil at least to stay alive. So in that sense, I would believe that policy at some point would get set in a way that we don't really break this line. We've held it so far. Let's see. $65 is where the line is. 65, 64, somewhere there. If we break that, then we are in serious trouble with oil, and then possibly we really have to worry about whether deflation comes first before inflation.
Natural gas is a different picture. I actually think we're bottoming out there. Do you look at it?
Yes, I also agree that I'm sorry, this is not natural gas.
That's Nova Gold.
I think this should be fine. Yeah. So it has actually made a nice impulse pullback. I do think so. This is a initial first wave and second wave, and probably minor 1, minor 2. So natural gas sometimes what it often does its own thing. So I don't try to correlate natural gas with anything.
Yeah, you shouldn't, or you'll end up your wife will be a widow. We don't want that to happen. And I'd have to find another guest. So, anyway, all right. I wanted your impressions on that, Rohit. Anything else top of mind
Yeah,
that we
so
haven't? Well,
yeah.
let me just ask you about one thing. If we get a melt up, the
Hmm.
other scenario, when I look at the weekly Bitcoin chart, I presented it today.
Yeah,
It looks like we could be on the verge of a breakout. Okay.
absolutely.
Okay. And then that's going to measure over 100 grand.
Yes, it's over 100 grand. Exactly. 100 and
All right.
107,000 is where I put it.
Okay. All right. So yeah, just a sideways consolidation to work
Yeah,
it off.
fourth wave. So the fourth wave is done here.
Yeah.
And I'm looking for that fifth, and fifth is pointing to 100,000, 107,000
Yeah.
on the upside.
So I don't see a big correction in the market with this happening because to me, this is a sign of liquidity.
Yes, absolutely. I agree. I agree with you on that. So this is a reason why it's not going to be very deep. But because of the seasonal cycle, especially the election cycle, which is what I started with, it's possible that equities diverge. Let's see. I don't know.
Yeah. Well, who are you voting for, Trump or Harris?
Well, I'm in India, so I don't
I
have to
knew
vote for
that.
either.
But according to our politics, people they'll probably accuse people from India of sending in write-in ballots. So anyway, if you were an American, who would you vote for?
Now that's a tough one.
All right,
Not
you don't have
not
to
not that
answer.
it's going to matter to the market, because 2016 Trump came in, the markets did well. 2020 Biden came in, the markets did
Yeah,
well.
great
The
point.
market's going to do well anyway.
Could 2025 be the year of reckoning?
Possibly. We are
After
very
we
close
get this, I mean, I don't know why it took me so long to, everyone was saying I'm going to hold my longs until, right before the election and get out. And I
Yeah.
didn't think the market would make it that convenient for them. We did have that big swoosh in July, that made me think, see, everyone's universally thinks they're okay until the end of October. But you know what? It's possible they're going to end up being right to have held until
The
the end.
only risk here, since we've already looked at the yield curve steepening and
Yeah.
the recession call, and that rate cuts happen and then you get a slowdown. The only thing which goes against the idea that we can get a blow off is that if this rally, I've marked it as 1, 2, 3. Now we're thinking 4 and 5 happens, but we are still inside 161. Can we really get an expanded flat? I mean, can this be A, B, C? That is, I think, the worst case scenario if you're getting deflation, which we spoke about. Then this is the only horrible scenario. But there's no sign of it actually. There's no indication of something of that magnitude yet. But we are simultaneously. So I didn't talk about the Indian market. In the Indian market, I am also seeing a 5-wave advance from at least this bottom, the March 2023 bottom.
Yeah.
And the Nifty does seem to have completed 5-year. In fact, on the mid cap and small cap index, we have a RSI at almost 92. So that's gotten extremely overbought. And so those segments are really scaring everyone, that whether we can get a setback in the mid and small cap segment in India. And this 5-wave basically correct to some degree. So yeah,
Okay.
this is what I'm watching out for India, that this 5-wave rise needs to get some correction.
Okay. Rohit, people that are watching you live and will watch a video later, I'm sure are going to want to know how to, besides follow you on X at India Charts, how to get a hold of you and keep up with your work.
So the India Charts app, both on the Google and on iOS, I think they can just download the app. So as and when I write an update, you get a notification that I've written something. And I write several updates every day. So it's like an ongoing commentary, just like a blog. And of course, if people want to use the data analytics software for India that we've developed, they can simply go to web.strike.money and start a trial over there.
Okay. So I want to wish you good luck and hope that profits rain down on you.
Yeah,
So that,
thanks a lot, Dale. Thanks.
yeah, and really appreciate your giving spirit of sharing your hard work, because I know you spend a lot of intensive time to come up with conclusions before you present them. So thank you for your giving nature.
Thank you. Thank you. Welcome.
All right, so everyone, there you go. You have it. My trading warrior brother, Rohit Srivastava, and check him out. And especially if you're, involved in trading the Nifty. I know we have some people in here that trade that, and that's going to be a wrap. Be careful today. Rohit, do you agree with me that no one has a gun to anyone's head to have to trade today, and that it's okay to just let the dust settle?
Absolutely. I think waiting for a day is sometimes just helps you make sense of everything.
Yeah. Okay. So, keep an open mind. And, it's harder to keep an open mind once you're committed psychologically to a position. So you always see the market better when you're flat. You're more objective than you are when you're committed. And don't use, see if you agree with this one, Rohit, and I'll let you go. Don't use mental stops.
Yeah.
Okay, because you may not have the discipline to act on it, and then you'll say, well, I'll see what happens, give it another day. Anyway, the last time I use a mental stop, my first stop was a mental institution.
Absolutely. I've lost money on that too. In my early days, I've just done that, and the next day is worse, and the third day you've almost blown up your account.
It's a good way to become an investor instead of a trader. So anyway, Rohit, thanks again, buddy. Good luck today.
Thank you.
And
Good luck.
good luck to everyone out there. Okay, good. And just, reduce leverage if you have to. It might be a good day just to go do something else, come back later and see what happened, and then formulate your game plan. And don't just count your pips, count your blessings. We'll see everyone tomorrow for the aftermath. Adios. And thanks again, Rohit, my friend. Adios.